Every trader believes they fear losses. But the real fear that quietly destroys accounts is the fear of missing out. It's subtle, seductive, and deadly because it disguises itself as opportunity. You see a candle explode, a market suddenly move without you, and something inside you whispers, if you don't get in now, you'll be left behind. In that moment, you're no longer trading the market, you're trading your fear. FOMO is powerful because it pulls you out of the present and traps you in an emotional future that hasn't even happened. You start imagining gains that were never yours, profits that existed only as possibilities, and suddenly you feel a pressure to act fast, impulsively, desperately. But trading from desperation is not trading at all. It is reacting, grasping, and surrendering your edge to the illusion that the market is offering a once-in-a-lifetime opportunity. The truth is brutally simple. No move you chase will ever feel as good as the discipline you break to get it, because once you violate your rules for one trade, you've trained your mind to do it again, and again, and again. FOMO doesn't just take your money, it takes your confidence, your clarity, your ability to execute with objectivity. It transforms the market into something it isn't, a place where you think you must constantly act or risk falling behind. But the market doesn't reward urgency, it rewards alignment. It doesn't punish you for missing a trade, it punishes you for forcing one. And every time you act from FOMO, you're telling the market, I don't trust myself enough to wait for my edge. The real challenge is not learning how to catch every move, it's learning how to accept the ones you weren't meant to catch. Mastering FOMO means mastering acceptance. Acceptance that the market moves with or without you. Acceptance that opportunity isn't rare. Acceptance that patience is not passivity, it's the highest form of psychological strength a trader can develop. When you stop needing to chase, you start being able to choose. And that is the turning point where your trading stops being emotional and starts being truly consistent. FOMO isn't caused by the market, it's caused by your inability to accept that missing a move is a normal part of trading. And until you understand this at a deep psychological level, your decisions will always feel pressured, rushed, and emotionally contaminated. The market is never forced a trader to chase, it simply moves. It rises, it falls, it trends, it consolidates, it does what it has always done. The emotional friction comes from the meaning you assign to those movements. When a candle explodes and you're not in the trade, the pain you feel isn't because the market is leaving without you, it's because you believe you should have been on that move, that somehow it belonged to you, that you've missed something essential and irreplaceable. This belief is an illusion. Opportunity in the market is endless, repetitive, and cyclical. But when your mind is fixated on the idea that one move mattered more than all others, you narrow your perception until you can only see what just happened, not what is consistently available. Missing a move only becomes painful when you interpret it as evidence of your inadequacy, your lack of vision, your lack of precision. It's not the event itself that hurts you, it's the story you write about it. And that story is rooted in your inability to accept one fundamental truth. You are not supposed to catch every move. Traders who fight this truth spend their entire careers in a state of emotional conflict. They want certainty in an environment that offers none. They want continuity in a market that delivers randomness. They want control over a flow that does not belong to them. The harder they try to catch everything, the more the market seems to slip through their hands. They begin to believe that the market is teasing them, tempting them, punishing them. But the market is never personal. It reflects nothing about you except your own expectations, hopes, and fears. When you refuse to accept that missing trades is part of the process, you create the emotional space for FOMO to grow. And FOMO thrives in minds that resist uncertainty. The moment you imagine that this move will never come again, you instantly manufacture emotional urgency. Suddenly, every tick is a countdown. Every candle becomes a threat. Every pullback feels like a final chance. You start seeing the market not as a landscape of probabilities, but as a string of disappearing opportunities. The impulse to jump in grows stronger because your mind is no longer responding to price, it's responding to fear. Fear changes the way you interpret information. Instead of looking for confirmation of your edge, you look for confirmation of your anxiety. You start searching for reasons to justify entering late. You reinterpret every breakout as a personal call to action. You see every pullback not as structure, but as the last moment to avoid regret. The market becomes a mirror for your insecurity, and your decisions become attempts to escape the emotional discomfort of watching price move without you. That discomfort, this peculiar pain of missing a move, is nothing more than the ego's refusal to accept that the market will always offer more opportunities. The ego wants to feel right. It wants to feel special. It wants to feel in control. It wants to believe that if the market made a move, then somehow it was meant for you. But trading doesn't reward ego-driven narratives. It rewards alignment with reality. And the reality is simple. No trader, no matter how skilled, catches every move. If you can truly embrace this, then missing trades stops being emotional. It becomes normal, neutral, and unimportant. You stop obsessing over what was. You stop replaying charts in your mind. You stop imagining the money you should have made. Instead, you redirect your attention toward what is unfolding now and what may unfold next. You begin to operate from a place of calm observation rather than reactive impulse. But acceptance cannot be half-hearted. You cannot say, "I accept missing trades," while secretly believing that every missed move is a sign you're falling behind. This contradiction keeps you stuck between logic and emotion. Logically, you know another opportunity will come. But emotionally, you act as if this one move is the last lifeboat off a sinking ship. This internal tug-of-war creates trading behaviors that contradict your plan: late entries, oversized positions, revenge trading, impulsive risk-taking. You're not trading the market. You're trading your unwillingness to feel the temporary discomfort of not being involved. True acceptance feels like release. It removes urgency. It allows you to look at a market that is exploding without you and say, "That wasn't my trade. Another one will come." This is not weakness, it's strength. It takes far more discipline to stand aside and honor your edge than it does to be pulled in by excitement. FOMO trading feels powerful in the moment, but it is always a psychological collapse. It's the abandonment of structure in favor of emotional relief. And here's the irony. The trades you chase from FOMO rarely behave the way you imagine. Why? Because when you enter late, you're entering on someone else's profit-taking. The professionals who positioned early are already planning exits while you are scrambling to get in. By the time fear pushes you into a trade, the edge has already decayed. You're trading the tail end of a move that already expressed most of its potential. This is why so many FOMO trades reverse against you almost immediately, because your entry wasn't based on analysis, it was based on emotional pressure. Meanwhile, the trades you patiently wait for, the ones aligned with your rules, your structure, your strategy, those trades tend to unfold smoother, cleaner, more predictably. They offer more clarity, less chaos, and far less emotional turbulence. But you cannot access these trades consistently if your mind is constantly being yanked into the past by regret or into the future by fear. FOMO doesn't disappear because you force yourself to avoid chasing moves. It disappears when you no longer feel emotionally threatened by missing them. And the only way to reach that level of psychological freedom is through genuine acceptance, acceptance of randomness, acceptance of imperfection, acceptance of missed opportunities, acceptance that your job is not to catch everything but to execute your edge with consistency. When you operate from acceptance, your perception shifts. You stop fixating on what already happened and start paying attention to what is setting up. You begin to see the market in snapshots rather than storylines. You learn to take trades when they make sense, not when they make you anxious. You replace emotional reactions with observational clarity. This clarity builds internal trust. And once you trust yourself, FOMO loses its power. Because FOMO only thrives in traders who believe they cannot rely on their abilities. FOMO is a symptom of self-doubt. When you trust your edge, when you trust your process, when you trust your ability to act when it matters, you no longer feel pressured to chase anything. You are no longer seduced by movement. You are grounded in discipline. Acceptance doesn't make you passive. It makes you prepared. It transforms missed trades from emotional triggers into neutral data points. It allows you to observe without attachment, decide without pressure, and execute without fear. It gives you the psychological freedom to let the market move without feeling that you need to move with it. The paradox is that once you accept missing moves, you actually start catching more of the right ones. Why? Because your mind is no longer clouded with fear-driven impulses. You're no longer distracted by fantasies of what could have been. You're present. You're focused. You're aligned with probability rather than possibility. And in this state, your actions become consistent, disciplined, and strategically sound. Missing trades is part of trading. Accepting that is part of mastery. FOMO disappears not when the market stops tempting you, but when you stop interpreting temptation as threat. The market will always move with or without you. The question is whether you can develop the internal confidence to wait for the moves that truly belong to your edge. The moment you emotionally need to be in a trade, you stop seeing probabilities and start seeing illusions. And that single shift from neutrality to emotional need is the point where most traders lose themselves. You're no longer looking at the market as it is. You're looking at it as your fear, your hopes, and your unmet expectations want it to be. Needing a trade transforms the chart from an objective landscape into a psychological projection of your internal state. Candles no longer represent buying and selling, they represent validation, relief, and escape from discomfort. And when you trade to feel better rather than to follow your edge, you enter a realm where illusions masquerade as opportunities. A trader who needs a trade is no longer evaluating risk, they're evaluating emotional pressure. They feel restless when the chart is quiet, anxious when price moves without them, and uneasy when they're flat in the market. Their sense of identity becomes entangled with market movement. Up candles feel like affirmation, down candles feel like personal attacks. This emotional attachment makes it impossible to see the market clearly. You start to notice only the things that justify taking a position. Every minor pullback becomes a reversal. Every small breakout becomes a trend. Every wick becomes a sign. You're no longer analyzing, you're searching for evidence to support the decision you already emotionally committed to. When you need to be in a trade, your mind abandons probabilities and slips into narrative thinking. You start telling yourself stories that make you feel secure, hopeful, or justified. You imagine profits before they exist. You imagine momentum before it's confirmed. You imagine missing out on gains that no one has actually captured yet. You convince yourself that this time is different, or the move is obvious, or if I don't take this now, I'll regret it later. These stories are illusions, driven by emotion and disguised as logic. They feel real because they relieve the discomfort of not being involved, but they have nothing to do with the actual structure of the market. The more emotional your need becomes, the more your perception distorts. Instead of asking, is this a high probability setup? You start asking, how can I justify entering right now? That shift is catastrophic. It turns you from a strategist into a gambler. A strategist waits for alignment, confirmation, and context. A gambler looks for excitement, urgency, and thrill. When your mind is driven by need, you're essentially gambling even if your strategy is sound because you're no longer using it. You're only bending it to support your emotional agenda. This is why traders often say, I knew I shouldn't have taken that trade. They did know. Their logic knew. Their rules knew. Their experience knew. But their emotional need overpowered all of that, distorting the chart into something that fit their desire. And once you enter a trade from emotional need, you've already lost control of the outcome, regardless of whether the trade wins or loses. A winning trade reinforces the illusion that emotional decisions pay off, making you more likely to repeat them. A losing trade reinforces panic and regret, creating even stronger emotional impulses in the next setup. Needing a trade is a silent psychological trap because it doesn't feel dangerous in the moment. It feels urgent. It feels justified. It feels like you're doing what you're supposed to do. You feel compelled to act just because the market moved, not because your setup appeared. The pressure builds internally, not externally. The market doesn't care whether you trade or not, but your mind builds the illusion that you must participate or you will miss something important. That illusion removes your ability to wait, observe, and evaluate. It blinds you to risks and magnifies potential rewards until your perspective becomes completely unbalanced. And an unbalanced perspective is the enemy of probability thinking. Probability demands neutrality, a willingness to accept that the outcome is uncertain, that the trade might fail, that you might miss the move entirely. Emotional need cannot coexist with that uncertainty. It pushes you to cling to the idea of winning and to reject the possibility of losing. When you reject loss psychologically, you stop assessing risk. You start entering trades with oversized positions, tight stops, or no stops at all. You take setups that don't match your plan. You chase candles because they feel right. You act not because the trade makes sense, but because your emotions demand immediate relief. Illusions thrive in this mental environment. Illusions appear when you're afraid to stay on the sidelines. They appear when you're frustrated after a loss. They appear when you feel behind, desperate, or impatient. And the market is full of movement, movement that your emotionally charged mind will interpret as opportunity even when it isn't. Every spike looks like the start of a trend. Every nudge looks like confirmation. Every minor reaction looks like a precise level being respected. Your brain becomes hyper-attuned to any detail that supports the illusion you want to believe. The key point here is that emotional need is not triggered by the chart, it is triggered by you. It comes from the beliefs you carry into the market, the belief that you must catch every move, the belief that sitting out is failure, the belief that trading equals productivity, the belief that your identity as a trader depends on constant action. These beliefs are illusions themselves, and they create a mental environment where you cannot remain objective. Until you dismantle these beliefs, you will continue to be pulled into trades that never belong to your edge. Objectivity requires emotional detachment. And emotional detachment is impossible when you need the market to give you something: money, validation, certainty, excitement, redemption. When you need the market, you become vulnerable to its randomness. You stop trading your plan and start trading your emotions. Your decisions become reactions instead of choices. You lose the ability to walk away, to wait for confirmation, to evaluate risk, to stay disciplined. You become a puppet to your impulses. But when you remove emotional need, the market becomes clear again. The chart reveals structure, not stories. Movements become information, not temptation. You can see the difference between noise and signal. You can evaluate probabilities without bias. You can wait for your edge without anxiety. And, most importantly, you can accept uncertainty without forcing outcomes. A trader who doesn't need a trade sees the market with clarity. They see setups for what they are, not what they want them to be. They can remain still when the market is messy, wait when the trend is unclear, and strike only when conditions align. They make decisions based on logic, not pressure. They enter trades because the opportunity exists, not because they need emotional relief. Trading will always test your ability to stay neutral. The market is unpredictable, volatile, and constantly shifting. Your edge is not in predicting outcomes, but in maintaining psychological clarity. When you no longer need the market to cooperate with your emotions, you begin to operate from a position of strength. You stop seeing illusions and start seeing probabilities again. And that shift from emotional need to disciplined neutrality is what separates reactive traders from truly consistent ones. Because in the end, the market doesn't punish bad entries, it punishes emotional ones. And the only way to rise above that is to eliminate the need to trade. When you no longer need the market, you can finally see it as it is. And when you can see it as it is, you can trade with the clarity, discipline, and consistency that every trader seeks, but only a few ever achieve. You eliminate FOMO not by controlling the market, but by building enough internal trust that you no longer chase what isn't yours. And that truth, simple as it sounds, is one of the deepest psychological transformations a trader can make. Because FOMO is never about price action. It's never about missing a candle, missing a breakout, missing a trend. FOMO is about the absence of internal certainty, the absence of trust in yourself, your process, and your ability to wait for the trades that truly belong to your edge. Without that trust, every move the market makes feels like a threat. With it, every move becomes just information. When you lack internal trust, the market feels dangerous. Not because it actually is, but because you don't yet feel grounded in your ability to navigate it. You watch price move without you, and instead of seeing it as neutral market behavior, you feel it as personal loss. You see other traders posting gains, and instead of recognizing randomness, you blame yourself. You see volatility expand, and instead of waiting for structure, you jump in out of fear that if you don't act now, you'll forever miss your chance. These reactions have nothing to do with the chart, they originate from inside you. They come from insecurity, from impatience, from self-doubt, from the need to relieve emotional discomfort instantly. If you don't trust yourself, the market becomes your emotional battleground. You'll look for trades to feel better, not to execute your edge. You'll chase moves so you don't feel left out. You'll jump in early because you don't trust that you'll be able to execute if you wait. You'll exit too soon because you don't trust that you can handle unrealized profits without panicking. You'll hold losers because you don't trust your ability to take disciplined losses. All of these behaviors stem from the same psychological root. The absence of internal trust creates fear, and fear creates FOMO. The moment you decide that you need the market to behave a certain way in order for you to feel secure, you begin chasing what isn't yours. The market does not belong to you. Its moves do not exist for your benefit. Its timing is not aligned with your expectations. And when you try to force alignment, when you try to catch every move, predict every candle, or impose your will on randomness, your trading becomes driven not by probability, but by emotional desperation. But when you build internal trust, you no longer feel the urge to chase. You no longer need the market to validate you, reward you, or reassure you. You don't interpret missed trades as threats or signs of failure. You don't interpret volatility as urgency. You don't interpret movement as invitation. Instead, you interpret everything through the lens of your edge. You wait because you trust that waiting creates clarity. You observe because you trust that observation gives you information. You act only when your setup appears, because you trust that you will take advantage of the opportunities meant for you and let the rest pass. Internal trust begins with accepting one profound reality. Not every move belongs to you. The market has thousands of movements every week. Some align with your system, most don't. Some offer high probability. Others are pure noise. Some give clean entries. Others require anticipation you shouldn't indulge. When you trust yourself, missing these moves is not painful, it's expected. You allow the market to move freely because your identity isn't tied to catching everything. You don't feel behind because you understand that consistency is built on selective participation. You don't feel anxious because you know that your next opportunity is always forming. FOMO thrives in the minds of traders who believe they need the market. Internal trust thrives in those who know they don't. To build internal trust, you must first build internal honesty. You must be willing to confront the truth about your behaviors. Why you chase, why you force trades, why you feel anxious when flat, why you panic when you miss a move. Behind each of these reactions is a belief you haven't examined yet. Maybe you believe that being in a trade means you're being productive. Maybe you believe that other traders are progressing faster than you. Maybe you believe that opportunity is limited. Maybe you believe that patience equals weakness. These beliefs create internal instability, and instability is where FOMO grows. Internal trust begins when you dismantle these illusions. When you recognize that opportunity is abundant, not scarce. When you realize that missing a trade does not reduce the quality of future trades. When you understand that the market will give you infinite chances to express your edge. When you accept that consistency has nothing to do with activity and everything to do with alignment. When you see, clearly, that the trades you force always cost you more than the trades you miss. Trust is built through repetition. Every time you wait and let a move pass because it wasn't your setup, you strengthen your internal foundation. Every time you follow your plan instead of your impulses, you reinforce your discipline. Every time you take your stop without hesitation, you reaffirm that you can handle loss. Every time you wait patiently through consolidation and only enter when your criteria align, you build a deeper sense of reliability in yourself. And when you trust yourself, you don't fear missing anything because you know you will act when it truly matters. Internal trust is not built in moments of excitement. It's built in moments of restraint. It's built in the quiet decisions no one sees. The times you don't chase, the times you don't react, the times you don't break your rules, the times you choose calm over urgency, the times you choose clarity over impulse. These moments shape the trader you become far more than any winning trade ever will. Once trust becomes internal, the market loses its emotional grip on you. You stop chasing because chasing feels foreign, unnecessary, unintelligent. You stop forcing trades because forcing feels out of alignment. You stop reacting emotionally because you trust yourself to act when the moment is right. And the market's randomness stops provoking fear. It becomes simply the environment in which you operate. When internal trust takes root properly, something remarkable happens. The exact movements that used to trigger FOMO now trigger nothing. A huge candle breaks out without you, you feel calm. A trend begins while you're flat, you remain objective. A reversal happens that you anticipated but didn't catch, you stay neutral. There is no emotional spike, no panic, no urgency. Because your sense of opportunity no longer depends on a single trade. Your confidence isn't tied to a single moment. And your perception is no longer distorted by the fear that something essential is slipping away. Nothing is slipping away. This is the core realization. The market will always offer more. Patterns repeat, endlessly. Setups cycle constantly. Your edge will reappear. The structure will form again. You are never missing the one. There is no one. There is only probability, opportunity, and execution. Fear arises when you believe the moment is unique. Trust arises when you know that opportunities are infinite. This is how you eliminate FOMO, not through control, but through surrender. Not through predicting the market, but through understanding yourself. Not by mastering price action, but by mastering your internal reactions. The moment you no longer chase what isn't yours, the market becomes a place of clarity rather than chaos. A place of patience rather than pressure. A place of probabilities rather than illusions. Internal trust frees you from the emotional gravity that pulls most traders into impulsive mistakes. It turns the market into a partner rather than a threat. It allows you to engage with uncertainty without losing your center, and ultimately, it transforms trading from a constant battle into a controlled expression of discipline. You eliminate FOMO not by changing the market, but by changing what the market means to you. And when you trust yourself completely, you stop chasing anything because what is meant for your edge will always find you. FOMO disappears the moment you stop needing the market to fill emotional gaps and start trusting yourself to act only when your edge is present. The real victory isn't catching every move, it's developing the discipline to let go of what was never yours. When you build internal trust, patience becomes natural, clarity replaces urgency, and the market's randomness no longer feels threatening. You stop chasing illusions and start responding to probabilities. And in that shift, you reclaim your consistency, your confidence, and your control. The market doesn't determine your success, your ability to trust yourself does.